following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble and lovable, squeezably soft host. Every day we come to you that there's a stock trading at the same time.
The following takes place between 2 p.m. and 3 p.m.
One more day of not a lot of movement. We're up, let's call it 4 points on the S&P cash. More importantly to me, of course, the volume, which is just coming in at 2 billion shares, so a shade lighter than even yesterday. Options rollover has been incredibly light and doesn't look like we've got a lot. Of course, a lot of news going on, and that doesn't change many things in this market. It looks like it's ignoring it for all practical purposes. We'll see what happens in the next couple of days. Options rollover. Normally, if you get a very flat or non-volatile day on Monday, you will get the exact same thing on Tuesday, and I'm going to pretty much call that, especially with the action, international action of terrorism in Belgium this morning, and the kind of total lack of anybody looking at this and doing anything literally about it, trading, which kind of takes me back to the interesting part of reminiscence of a stock operator. It always hit me. He's got a big chapter. Jesse Livermore has a big chapter in his book about shorting the San Francisco earthquake. And it's kind of very interesting. I guess maybe today it wouldn't take near as much time, but he read about the San Francisco earthquake and thought about it for a little while, and there was absolutely no movement in any of the stocks. Everybody hadn't figured out what the implications were, but he made a phone call out and found out, yes, that all the train yards had been destroyed, and were probably going to take 3 to 6 months to get put back together. So he instantly started shorting the trains, and they actually went up for a couple of days after it because everybody thought that there would be a lot of stuff being hauled out to San Francisco to rebuild it. But not so much, because you couldn't get anything there. No matter how fast they wanted to put things back together in that time, there was no just-in-time economy. In 1907, if you needed to, have, 40 or 50 miles worth of new rail lines, the metal and the timbers and everything else, you were probably talking about putting an order in probably tomorrow, and maybe in a month. They'd start cutting the timber, and then they'd creosote it, and then they'd show up maybe 3 months later. And, of course, you weren't moving it there by rail to begin with anyway. And all the crossovers and exchanges in there just tied everything up for about 6 months to a year. And one of his biggest trades, but I always was hit by the fact that maybe even today now people put two and two together a little bit faster, but it still seems to me like you get in a world event, a black swan event, and people don't put the two and two together quickly. I don't see one here. Maybe there is one. Of course, the first thing to do is start shorting the airlines, as they did this morning. But for the most part, everybody kind of just walks by it, kind of like a car accident. Yeah, I figure someone else has already called about this. I don't need to 911 them. I've seen 5 cars go by. I'm sure someone did called before, but you never know. Anyway, time to get this party started.
That it's all just a little bit of history repeating.
Andy Grove of Intel died today, actually. I guess it was last night or today. Unfortunately, probably a lot of people will not be talking about him. I imagine that it probably would, much like Farrah Fawcett died the same day that Michael Jackson killed himself with drugs. No one really remembers the whole Farrah Fawcett thing. They remember Michael Jackson's circus of him dying. Andy Grove will probably be overshadowed by this, although in the long run, I have a feeling that his life will probably overshadow what a couple of people tried to do in anger in the long term. He wrote several books. One was called Only the Paranoid Survive, but he escaped Hungary and the Nazis trying to kill him, came to this country, got a college education by his shoestrings, was one of the first hires in Intel in 1968, became the practical-minded member of the they call him a trio, the Three Amigos, that eventually led Intel Inside processors to be used more than 80% of the time in world computers. He said some things, and actually my management style of the company I work for would have been much more like Intel. He had some very smart things. He said, if we don't eat our own lunch, others will. And we constantly have to be swimming upstream. If we start to rest on our laurels, we will die. And that kept his company always probably one of the best run companies. Continues to enjoy margins in the 60% range. And this is after 40 years of being in that business. This is not a one-trick pony. This is not an iPhone that has delivered 65%, maybe for 5 or 7 years. This is a company that has been able to deliver those kind of margins over, 45 years now, and stood the test of time. But like I said, a lot of things would have been a lot different around the company I work for if I had any input. Not that I ran it. I kind of ran certain divisions of it. But the part of always being willing to take your price down so that others cannot get fat and then attack you later with yet another product has done very well for Andy Grove. And I think Silicon Valley owes a great deal to him, especially the chip community. A lot of the work that Intel did bled into all the other companies around Intel in Silicon Valley. And if you read any of his books, if you ever trade technology, some very good stuff. There's another book by David, I think it's Andy Davidow. I'll look it up during the break. Probably the best book about marketing technology. But Andy Grove, very instrumental into what would become the Bible of understanding disruption and moving things along. And I learned a lot from him. Never met the guy. Saw him talk a few times. But, man, what a life. Escaping Hitler, coming here to a new country and loving it, not telling everybody why it's so horrible, and making the most of it. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we have, I had some emails during the break. And of course, if you ever have any questions during the show, you can always email me at path@tfnn.com and we'll try to get to them. Question was, what was the book I was talking about? It's from William Davidow. I don't know why I thought Andy, probably from Andy, who passed away, Andy Grove. But anyway, if you want a great book of looking at the inside of technology to understand how especially Silicon Valley, chip companies, everything else works. I can't recommend a book more highly. There's basically 2 or 3 that are really great that changed the way I did things and the way that I did things inside the company in the 90s. But still probably the Bible that is on everybody's shelf that is in Silicon Valley or a startup, and it's called Marketing High Technology by William Davidow, and has a lot of interviews in there from various people in Intel, but very interesting stuff, and I think it's great for a trader in that you really get an idea how Silicon Valley thinks a great deal about driving costs down, giving products a soul, and how that all gets put together. Anyway, thanks, Andy. Had some nice emails and even a phone call today, and they basically said I could do this.
I informed you thusly.
Yes, I told you so. And that I told you so came from, I don't know what, 2-3 weeks ago when we talked about Apple and the FBI. I said it didn't really matter. The FBI was lying. They had another way into their locked iPhones. If they have physical possession of it, they could use a thing called the Chip Whisperer. I gave everybody that wanted it the link to the Chip Whisperer website. But basically, if you have physical possession of the hardware, it is almost impossible not to be able to get into it. So basically, I have this kind of theory, which is either, sometimes people can just tell you things and you go, well, maybe they did know, didn't they know? But this was either one where you had two boxes to put the FBI in, and that was one, stupid, or the other one was a liar. And since they have a lot of people doing this and looking at stuff, I figured the liar box was the one to be checked now. If you missed it last night, basically they said, you know what, we're going to ask for a delay. We really don't want to go to court on this thing. Apple, of course, was going to be in discovery and make the FBI cough up some stuff. Also, they were probably already going to be able to get the first case of perjury in for FBI, and I think that's why the FBI came back, because I think they kind of lied out their exhaust port to Congress all about this too. But I will put this in my little bag of I told you so's, or as Sheldon likes to say,
I informed you thusly.
That's right. The Apple always had the ability to get into it. What was this? This was a way to make Apple actually give them a way to get into every phone, not just in one phone. So, and everybody, I think, finally, it took a couple of weeks. The FBI kind of thought that they could roll over Apple on this one, and now it is going to the graveyard of horrible ideas, hopefully. Anyway, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And what else can you say? Who was he spying for? Who they're talking about? Anyway, Applied Materials is the first list of stocks that we're going to get into today. As it's kind of quiet, not much is happening out here. I did find one position to take today, and I kind of like the way that it started here. But to tell you the truth, it is long and tough to look into this market and find anything moving today. I suspect that will change tomorrow, and we're looking at it. Certainly, if you're in the SMH or semiconductor space, Applied Materials is one of the first stocks to really start looking at. Let's get back to that. I missed it. Anyway, it's, of course, I think it's flat as a pancake today. And what is it? Up 9 cents, so no big deal. This thing gapped down with huge volume. And this goes back to April 27th of 2015. So we're almost going on a year of this gap being unfilled with Applied Materials. Came down on 219 million shares on that. I think it was probably a nice sunshiny day. Kind of vaguely remember that day. Anyway, we're back into it to now. Applied Materials, of course, is interesting, not in that I'm trading it, because it doesn't move that far, but more important in that it supplies all the chip makers with chip making supplies, new equipment. And if you see this moving, you probably should start looking at all the companies that do make chips and see if they're getting ready to move. So one of these stocks that I classify as a canary in the coal mine, and that we're back up here to resistance, especially the way we hit it yesterday. Of course, we had monster day down, and that was on 220 million shares on the 27th of April. You get into the first test, and it tests it with 55 million shares on May 28th. And you get this long period coming out here. So the day before yesterday, we get a little less than 20 million shares. Yesterday, we get 13 million shares. And today, what are we looking at? 3 million shares or so far. Gives you just about everything. As I've said the last couple of days, I suspect that the easiest of all the money is over. And especially if you wanted to look, let's take a quick look at the SMHs. Why we're wandering it down this lane, SMH, he said. And SMH, just take a quick look here. Did I get anything? Did I get it? Yeah, it's 3 cents too, so no big deal on that. You did make a lower low. It did do it on lighter volume by 1 million shares. If you go back to the last move in the SMHs, that was January 20th, with 5.3 million shares. Got into it with 4 million shares. But what it hasn't done is gone out and tested all-time low. which is the August 24th low of 2015. And I continue thinking that we get and are in this bigger trading range with semiconductors. So as we look at all this, energy is a little out on the way back up, especially the last few days. You know, we've had a couple of gaps. Those gaps have been, well, on the SMHs on the March 1st on less than 2 million shares. The previous gap on that came up on 4.2 million shares. So is there anything left in the tank? Are we going to get back up to $56 for these previous two, the October 23rd, 2015 high and the December 7th, 2015 high are both in that 56 range? Could you get up there on another buck, buck and a half? You could, but man, talk about light volume and light and variable trading in this, plus a ton of stocks that are hitting very hard resistance levels like AMAT. But could you get that last little bit out of the tank? I don't know. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we'll get into some other stocks out here. AstraZeneca, kind of like this stock the way it was setting up, but we'll have to see whether it gets back in the trading range. IBB actually had a little bounce, and by little bounce, I mean little. I think it was in the 260s today. What is it? 263. Up $6, which is not bad on a day when nothing's moving. I was hoping that we might get some better signals. There aren't a lot of these stocks out there. We talked about it last week, where these biotechs look like maybe some of these things had started to bottom. And of course, AZN is one of those. I was looking at it today to see how well it did. Not a lot of volume today. And of course, we're going against the 11 million share day of February 8th. And not too bad. So if all you have is, 1.6 million shares, is that right? Let me pop this up real quick. Just make sure. AZN, if I can type right. Yeah, 5.8 million shares. So we're only about halfway through that. And I don't know if there's a whole lot you can make about it other than that, which is the February 8th low has been broken. I do like the energy on the way down. It hadn't been exciting. A close back into this trading range could put a final floor in at least some of these biotechs. Doesn't mean they're going to rally, but it does look like there are at least a handful of the bio techs. Braskem, BAK, another stock that I've been watching here. We'll see how it's doing. What is it? BAK. Didn't think this one had any movement either. No, it's up 17 cents, but no big deal. It's going over its previous high of $15.50 with 700,000 shares, I guess. And what are we in for now? About 400,000 shares. So a lot of really lackadaisical trading out here. I'm trying to find any of these stocks that are pushing previous highs and get a little better view of them. When we get into some of the financials, still looks to me like that is going to be the weakest and most susceptible to a pullback right now are the financial stocks, especially when you look at the ETFs and the ETF volumes. BBT, of course, one of those banks, coming in with a little under 2 million shares as we start, at the bottom of the hour here. So you're not going to have a lot, but you've had two major gap downs in this stock that came on the 4th and the 7th of January that started that big trend down. We're just starting now to get back into these, but yesterday he had a lot of volume, not a lot of movement. That was really just going against the 4th of April, which had 5 million shares. You basically had 9 million shares. You'd think really, you'd get really moving along here a little bit more, but fairly lackadaisical, fairly light volume. I don't see that there is a lot to be garnered right now, other than there is a lot of overhead resistance that had heavy volume on the way down. And of course, it's all those people that want their cash back. And as soon as they get it, they are praising the trading gods themselves to get out of it. EQIX, EQIX is another one I've been watching out here. January 11th, 1.6 million shares. Got into it on March 7th with 1 million shares. Still kind of hanging out with its buddies up here. And it's up 280, so it's up a little bit at 320.19. So still not over that 321.85 of a couple of days ago. But we are kind of looking at what kind of volume? 316,000 shares. So again, what you don't want to see is, of course, all these stocks to come up here and hit these highs and just no volume at all. Worst of all, it could just go sideways. At least if you're wrong once, you won't be wrong again. But at this point, we continue to see stocks that have some issues. Honeywell was another one up here that I thought very interesting today. Of course, as a big cap and a Dow member, always interesting. If I can get this thing to come on. Come on. For some reason, I'm having some connection difficulties. Not exactly sure why. Malicious website blocked. I don't think it's a malicious website. Let's try it again here. Okay, there we go. Honeywell up 76 cents at 113.44. Yeah, Malwarebytes is acting up, telling me some things that are not so quite true. Yeah, they had a new update last night. I saw it downloaded. It is not working as well as it has been in the past. Anyway, Honeywell up at 113.14, so it is over the previous high that we've been looking at, which is a spike from February 22nd. That had 15 million shares, and of course we've got about 1.8 million shares now. So kind of light on that. Energy was not all that bad from the low back here on February 24th. We've kind of come up to these levels, but I don't see the kind of juice that really tells me that Honeywell wants to break out. I don't see, of course, a lot that tells me that it's time to actually see these stocks break down either, which is the part that's problematic. Healthcare Trust of America, which is HTA, it's off 8 cents, so no big whoop out here either. But this is kind of some of the weaker patterns out here that we've been talking about the last couple of days. This one, at least on the highs, is given a fairly decent signal. The February 3rd high came in with 1.6 million shares. We came into it with 900,000 shares on the 17th. It's kind of gone sideways, and it's down 8 cents, 28.61 today. What is very interesting is you've had a number of days with this very tiny and light volume, and that continues out today with 400,000 shares. Nowhere close to our 1.6 million shares, and no real signs of strength as we come back up. We talked about Jarden yesterday. I wanted to check in on it again. I probably won't play this stock, but I will look at it for plays in other parts of the restaurant sector. Not a lot of energy on this right-hand leg up. You made a big W pattern. As we said yesterday, it did test the lows on lighter volume. It's up 22 cents today at 57.92. So just hanging out here at the highs, not really with any kind of energy or verb or vigor, as they like to say. But you know, you need some kind of action to really get this thing going. Stocks can go sideways for a while. Maybe this thing busts out with a sign. I'm thinking more likely maybe it goes a little higher with lighter volume and then pulls back into the trading range, and you get your signal. In the meantime, give me a call at 877-927-6648. Email me at path@tfnn.com. We'll get to those emails in the next segment.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. We looked at Jarden. We started off the show talking about AMAT, and I'm seeing kind of the same thing in KLL 10 core, which is not really much of this big, huge gap that popped up on the 21st of November with 24.5 million shares. We're now kind of tootling along up here. No real sign of strength now that it busted through the December 29th high at 1 million shares. Did have a little bit more volume out here, but normally you want to see some kind of candle and a better sign of strength out here. Let's go back a little longer for KLA 10 core. And again, as I said, anytime you get close to any of these gaps, you continue to find people that, of course, that own this thing back up here at the November 25th high at 84 bucks. And that's where this becomes incredibly tough sledding. But when I look at the SMHs, I look at AMAT, I look at the rest of them, I can't guarantee it would go down if they give, if you get back up into this gap up here, which is only a couple more bucks. Some of these actually start looking fairly good as long as the energy stays out of them. Now you've had, I'm going to say, okay volume this last leg from February 11th up to today. But again, just not a lot going on that make me think there is anything else. Okay. Click and clack. Yeah, click is gone. I'll just clack now. I like click because they used to make these things called sticky buckyballs to help solder leads onto the actual integrated circuit package. But I loved saying buckyballs. Northrop Grumman. Kind of interesting to see this stock testing its hot and light volume with terrorism knocking on our door today. When we look at this one, it's up 79 cents. Volume, though, is still tepid, 400,000 shares, just like the rest of the market out here. Yeah, if somebody in the dense and Vago all-time high. But at the same time, one stock is not the entire semiconductor space. If you are in the perfect space and you make a product that goes into an Apple iPhone, you're doing extremely well. The other 90% of the companies in Silicon Valley, not so much. So it is a big deal to get in the iPhone that gives you millions and millions and millions of movement of units. If you don't get in there, not so much. And of course, to get in there, you have to give Apple an awful good price. So normally you get the deal with Apple, and unless they absolutely have to have it, your margins are not going to probably be as fat as selling less to other people like Samsung and other cell phone manufacturers. Anyway, Northrop Grumman, we're back to this. You had 4 million shares at 193.99. We're at 194.96, 400,000 shares so far. And I don't know if this is just a condition of the general market, but I'm thinking, I think I said back here in the 160s that if you were looking for a slow-moving stock over the last couple of months, that anywhere in the military field would probably be a safe play. I probably have to say that you really need to be kind of worrying about higher prices now, as there's no volume, no sign of strength, no nothing, which I'll one day have to tell you the story of that. Swift Transportation Company, of course, some of these transportation companies are coming off the lows. SWFT, it's off 27 cents at 18.14. Not a whole lot. What we have seen, though, in this one is the November 6th high with 4.6 million shares. Got into it and slowly tried to break through that high and failed. A lot of times with about 2 million shares, kind of in a slightly higher consolidation range from the 28th all the way back up to the 25th of February. That failed. It's now back up here, but again, a couple of days ago, 3 million shares. Yesterday, 2.5 million shares. Today, a little under 1 million shares. Just not a lot of juice as we get back up to these levels where, of course, we're going to find some big day downs. Like in this company on September 22nd, you had 8 million shares on the way down. And that kind of, you just extend that across, you start seeing just how tough the sledding will be. I've got to find a new metaphor for tough sledding. If anybody in the den has anything. Okay. Okay. Thor Industries. Man, if this company does not make hammers, I'm going to be upset. What do they do? Thortech. Okay. We could do. They're in the medical field. Thortech. I guess they can make thoracic kind of things, right? That would be interesting. Where's my inlines, market pulses? Where's the thing? Market board, market pulse, company events. Doesn't have anything. Maybe doesn't have a profile. I'm not exactly sure what these folks do. Medical acquisition of Thortech. Vertex sets join. HeartMate 3. Maybe they make heart stuff. For some reason, this one's missing on the stuff that I'm doing. Anyway, it's starting to approach the previous high of December 1st. This thing spiked to $62.99. 1.3 million shares. Today, it's up a nickel at 63.50. For that high, of course, yesterday we didn't come into it with a lot of volume. Today, 2.4 million shares. Is that right? A lot of volume out here for being up a nickel. And not much of a range, if this is right. I wonder what's going on in this one. I don't know. I will have to come back to this one later. UA. I always think of United Artists, the movie thing, but Under Armour is what we're actually looking at today. When we look at UA, and what we're up, down $1 on Under Armour. We talked about this one, I think, on Friday, maybe Thursday last week. It was kind of coming up into this high volume spike of January 29th with 8.2 million shares. Yesterday, we had 3.1 million shares. Today, we got 1.7 million shares so far. And of course, probably likely that this thing tries to sneak up into the gap on that gap was the gap down on 11/30, November 30th, that had almost 5 million shares. So you got that 5 million shares, you attacked it with 8.2 million shares, turned right around, ran back down, filled a lot of this big gap it had on the 28th of January. So it's filled that gap. It's come, the energy kind of lackadaisical. I think maybe you're starting to set up some real big trading ranges on this, maybe 86 back down to that 70 level. Anyway, we'll get back to this on the other side.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
We got a few questions, some in the den, some in the email. We'll try to get to as many of them as I can in this last segment, but it's a short segment. All truckers look like SWFT. What do you see going on economically as it pertains to truckers? Please speak that out loud. Much like Uber and Lyft have come along, I've got a friend that is in a business that's kind of like that. They put shippers and consignment together to get them across the country. And there's always kind of a bidding war going on now between these larger transportation companies and individuals and smaller transportation companies. And that's really keeping prices down in the transportation business. Anyway, I talked to my friend from up north maybe a couple of months ago and asked him what was going on. And he said it's just very tough to keep prices up. Everybody's always going to somebody else that will do it for a dime cheaper. and that kind of sets a rolling auction. Now, this has come off the lows, and it is a supply and demand kind of an elastic price cost. He basically said that over the last couple of years, you had a lot more truck drivers coming along and on, and it's problematic to think that things are going to absolutely get as good as they were probably 5-10 years ago, besides the competition. But he says there's a lot of people that they can just drag off the sidelines to start driving when they need. So therefore, as long as they have a few extra cabs, you're really not going to see a huge price. You literally need to go through the ability for them to get cabs and drivers. And he thinks that it would probably take maybe another year or 2 years to get to the point where maybe they'd start to have to hire new drivers. A lot of them, he said, are retired, and they'll drive once or twice a week somewhere. They're not out 5 days or 7 days at a time anymore. It's easy to get those guys to go do a milk run somewhere else. And again, now that there's a centralized market for moving freight, before you had to kind of be a freight manager. You'd call around to the different companies and see who could give you the great deal. But now it's much more of a sharing kind of market economy with his company, at least, that he can go to any of these people and get the best price. And they really don't have to have a shipping manager around a lot of these companies anymore. There are other companies that actually do all that for them. And that's made me think that he's pretty high on his company, but I could see the logic in it. I could see the logic in it when the economy was really bad in 2009, and he was telling me all the woes. He'd be probably the first guy to tell me everything was going to the moon if it was. And he's just kind of saying, yeah, it's okay. It's just not great. And there's a lot of supply in both cabs and drivers on the side. Last question before we go to the end of the show. What did you think of the new Apple release? Thanks. I think the market reaction said it all. There's just not that much to yell up and down about from Apple. Normally they have one more thing that's really cool and neat. Another size of a tablet doesn't do a whole lot for them. I don't see IBM in their deal to put together a big deal for the medical field really doing much or getting much traction yet. And that's really probably what Apple was betting on, that they were going to be able to get into the enterprise with IBM. That has not bared fruit yet. So I think Apple's got a little while until they get a product out that can really change the bottom line. Anyway, hang on for Tom O'Brien for the next 2 hours. Andy Heck in the 5 o'clock hour. And we'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.